much, Richard, and good morning, ladies and gentlemen. It's a great pleasure to be here in Great Britain, Canada's close relative in the family of nations. Our countries share a history during peace and war, enduring values that go to the core of who we are, and ancient personal ties. We receive from Britain many of the institutions and values we cherish today: a monarch, a parliamentary democracy, a passionate commitment to freedom, a paramount respect for human rights, an entrepreneurial spirit, and a free market economy. Our friendship remains unshakable. So it is an honor to deliver the opening address to the Global Borrowers and Investors Forum. This conference leads the conversation on key trends in global financial markets. The people in this room play a key role in shaping the world economy. Your investment choices matter. So note the words of John Maynard Keynes, who called Canada a place of infinite promise. En fait, il n'existe aucun endroit plus prometteur ou investir que le Canada. Et il nous sera ainsi pendant de nombreuses années. Une démocratie stable, fonctionnant selon la primauté du droit, prête à faire des affaires, accueillant l'investissement étranger et offrant de faibles taux d'imposition et des possibilités très attrayantes. Indeed, there is no more promising place to invest than Canada, and that will be the case for many years to come. Stable democracy, operating under the rule of law, open for business, welcoming foreign investment, with low taxes and very attractive investment opportunities. My friend and predecessor, the late Jim Flaherty, noted that in January 1995, the Wall Street Journal called the Canadian dollar the Northern Peso. Well, that was 20 years ago, and how things have changed. Today, the Canadian dollar is on a list of reserve currencies tracked by the IMF. And today, Canada stands tall among the world economies, in no small part to Jim's contribution, whose work I will continue. Canada's post-recession strength was not really a happy accident. We needed a plan and the discipline to follow through. We call it our Economic Action Plan. It was our response to the Great Recession, so named for its magnitude, unseen since the Great Depression. The effects of the Great Recession are felt to this day. Many countries are still struggling to recover. In the Eurozone, growth is insipid. Deficit and debt levels are high and inflation very low, although there are clearly major differences between countries. As you know, the European Central Bank recently entered uncharted territory by imposing a negative rate on deposits, with more initiatives likely to come. In America, economic recovery has been weak, although recent signs have been more encouraging. Growth in China has moderated with concerns about their shadow banking system. There is volatility in emerging markets and concerns raised about compromised credit standards in search of yield in a low-interest environment. Geopolitical risks in Iraq, Iran, Syria, and of course, Ukraine are troubling. In this environment, Canada, a great trading nation, cannot be immune. However, we have fared relatively well. The recession hit us later than most, we were impacted less severely, we recovered earlier, and we emerged in relatively better shape than most developed countries. Les raisons de cette situation étaient nombreuses. Notre système bancaire, le plus stable du monde, selon le Forum économique mondial, a fait en sorte qu'aucune banque n'a dû être renflouée. Notre secteur vigoureux des ressources naturelles a contribué sans arrêt à la croissance. Nous avons appliqué une politique budgétaire vigoureuse mais prudente. Nous avons mis en œuvre des mesures de stimulation économique opportunes et ciblées en vue de soutenir l'emploi, nous avons en même temps accordé des allègements fiscaux aux particuliers et aux entreprises en vue de favoriser la vigueur de l'économie dans le secteur privé. The reasons are several. A banking system, the most stable in the world, according to the World Economic Forum, meant not a single bank had to be bailed out. Strong natural resources were a continuing contributor to growth, and we pursued a bold but prudent fiscal policy. We launched a timely and targeted stimulus package to support jobs. At the same time, we cut taxes on Canadians and businesses to encourage a strong private economy. As Canada recovered, we did the responsible thing. What Keynesians would have done, not what those who cite him to justify profligacy would have had us do. As a result, we are on track to return to balanced budgets in 2015. I'm encouraged to see Prime Minister Cameron and Chancellor of the Exchequer Osborne put a similar plan into place, and you are now reaping the benefits from private sector job creation and stability in the UK. The plan is beginning to show results. Of course, a strong United Kingdom benefits all of us. In Canada, as the deficit shrinks, we're expanding opportunity. 25 jobs in Canada are tied to trade. So our government is pursuing an aggressive free trade agenda. The crown jewel is an agreement in principle towards a comprehensive economic and trade agreement with the European Union. This is the most comprehensive free trade agreement in the history of my country. The EU market, with 500 million people and annual economic activity of over $13 trillion, holds a continent of opportunity for Canadians. With CETA, Canada will be the only country to have preferential access to the world's two largest markets, the EU and the United States, giving us access to more than 800 million of the world's most affluent consumers. Industries across the economy benefit from greater market access. Greater market access is particularly vital for Canada's natural resource sector, a sector of paramount importance to investors. Canada is poised to emerge as a 21st century resource superpower. We have all the ingredients to do it. Canada's energy infrastructure is booming. Hundreds of major resource projects worth about $650 billion in new investments are underway or planned over the next decade. Resources drive Canada's economy, accounting for 18% of our GDP, almost 2 million jobs, and over half our exports. We are first in the world in the production of potash, second in uranium, the third largest proven oil reserves in the world of over 170 billion barrels. We have a world-leading mining industry and 37 trillion cubic meters of natural gas, enough to support domestic use at current rates for over 200 years. Since our resources attract a lot of disproportionate attention, I should tell you that 77% of Canada's electricity use comes from non-emitting sources, compared to less than 50% in Europe and 33% in the United States. Our oil sands represent a minuscule portion of global emissions, just 1/1000th. Furthermore, we've reduced oil sands emission intensity by 26% in the last decade, and 2 years ago, we banned the construction of traditional coal-fired plants. Canada is doing its part to address the issue of climate change. This matters equally to the world, and it matters that we have significant natural resources to energy-demanding countries. Canada is a reliable, responsible energy supplier, in contrast to some of our competitors. One obvious example comes to mind. In 2013, Gazprom, Russia's state-owned natural gas monopoly, accounted for 1/3 of European natural gas, up from 25% in 2012. Ukraine alone imports 70% of its gas and oil from Russia. However, Russia is a notoriously unreliable energy partner. It cut off natural gas exports to Ukraine twice in the past decade, with resulting shortages in other European countries. In 2009, Russia cut off 2/3 of Europe's supply, just as a bitter winter was settling in. Some Balkan nations were shut out completely. But here is some good news for Europe. Just this month, over 500,000 barrels of Canadian oil sands crude reached the shores of Spain, the first major export of oil sands heavy crude to the EU. With the right infrastructure, Canada can ship more oil across the Atlantic. We can become an energy source to our European friends. The kind of friend and partner you can rely on. The kind of partner that honors its contractual commitments and would never cut off the taps for political self-aggrandizement. Ladies and gentlemen, I've outlined for you Canada's advantage. Lower taxes, balanced budget, less debt, freer trade, abundant resources. And the results of our actions speak for themselves. KPMG concludes the total tax costs for businesses in Canada were less than half that of the United States. Bloomberg ranks us as the second most attractive destination for business in the world. We're the strongest job creation record in G7, more than 1 million jobs created since July 2009. For the 6th year in a row, the World Economic Forum rated Canada's banking system the world's soundest. And Canadians have never been richer. A recent New York Times study found that after-tax middle-class income in Canada, substantially behind in 2000, now appear to be higher than in the United States. In fact, the Canadian middle class today is the richest in the world. All of our successes paint the big picture. Our low-tax, conservative plan for jobs and growth has created a new 21st century Canadian advantage. There is simply no better place in the world to invest, start a business, or take risks. Canada is an economic success story, a model for other countries in the post-recession world. Of course, all governments have a responsibility to get their fiscal houses in order as economic conditions warrant. And as conditions allow, all of us must reduce our deficits and improve debt sustainability. All of us must tear down barriers to competition. After all, it is the private sector that creates jobs. Without a healthy, growing private sector, we cannot sustain prosperous societies. Last summer, Canada's suggestion, the G20 committed to developing country-specific strategies for the Brisbane Summit. We agreed that these strategies should aim to lift collective G20 GDP by 2% above current trajectories. This would be a game changer. It would add $2 trillion to the global economy. But this game changer requires reforms. And as we reform, we must reject calls to tear up the foundation the world has built together over the past 5 years. We need to build on our previous commitments, not abandon them. Because those commitments, lowering deficits, improving debt sustainability, mark the path to prosperity. I look forward to the results of this forum and to your continuing support and advice in the future as we work together to keep the global economy firmly on the road to a steady recovery and strong future growth. Thank you for your attention.
Thank you very much. Mr. has kindly said he will take a limited number of questions. So if you would stick a hand up and wait for the microphone and say who you are. There's a microphone there.
Thank you. Thank you very much for your comments, Minister. You spoke a lot about Canada's role as a resource superpower. And I'm just wondering what the risks that might imply are, particularly, I guess, for particularly the Western provinces, an over-reliance on their export business to America, how much that creates a risk of correlation with the American economy?
Well, there is a strategic imperative that Canada is confronting, and that is that 100% of our gas exports, 99% of our oil exports go to one customer, the United States. As we all know, the U.S. has found vast amounts of shale gas and tight oil, and so will not be needing Canada as much as it has in the past, and indeed, on the gas side, will become competitors. Therefore, it's critically important for Canada to diversify its resources, and for that, we have to build the infrastructure to move our resources to tidewater, something which we have plans to do, and a number of regulatory applications have been registered, and a few have been approved in Canada. So there is an enormous opportunity because while the United States will be a diminishing customer, the International Energy Agency forecasts that energy demand will increase by well over a third by 2035. The bulk of the energy demand will come from the fastest growing economies, which are the non-OECD countries, in fact over 90%. So the Asia-Pacific beckons in that regard, but also Europe, being the largest collective economy in the world, is a potential market as well, particularly in the light of the issues that I talked about, the need to diversify sources of capital. I traveled around the world in my former capacity as Minister of Natural Resources, and I can tell you that when one visits China, South Korea, India, Japan, countries that will need vast amounts of resources, there is a tremendous complementarity. We need to find new markets, they need to find new, stable, and reliable sources of supply. Every single major resource project in Canada benefits every region of the country. And so the resource sector has been enormously important to the economy, but one mustn't exaggerate. It's still a little less than 1/5. But it drives manufacturing, it drives science and technology, and it drives employment right across the country.
Is it impossible to believe that one day you could build a pipeline under the Atlantic? Or floating on the surface?
That is more perhaps
Fuel burn. Okay. Another question. Mr. Garnett.
Thank you very much for coming. You referred to the Canadian banking system as having a wrong. At the time when European banks suggested what to be putting in their norms, US banks seem to be more dominant on the global stage than ever. What's the role of the Canadian banks? How do you see them fitting into that?
Well, of course, these are private sector decisions, but the Canadian banks are playing increasingly a larger role internationally. When you go to the United States, there are a number of Canadian banks that have vast retail networks. I don't think that Americans know that TD was originally Toronto Dominion, but it's one example of how on the retail side we're expanding, not only in the United States, but in Europe and in Asia. And on the wholesale side, we're active participants. We have a stable system because we have a conservative regulatory environment in which the banks operate. That will continue, but there are opportunities for Canada to continue to play a role, particularly as the capital markets side has perhaps grown. Our banks are very much involved in that as well, because they all have capital markets affiliates.
Is there another question in the audience? Sorry,
My question is that I always find it bizarre that the Bank of Montreal is based in Toronto. The question is even if the politics is resolved, is there still an economic divide between Quebec and Canada?
Well, these decisions are taken for commercial reasons. The financial center of Canada has shifted towards Toronto, although Montreal remains very vibrant. A new government was recently elected in Quebec. It's taken some bold and needed steps to address some fiscal issues that plague some of the provinces. I'm very optimistic that Quebec will emerge a stronger economic force in Canada. It remains an important part of the Canadian economy, and it has a very healthy financial services sector.
Question.
Kevin Zhao from UBS Global Asset Management. My question is, in recent years, Canada has turned from a current account surplus country into a deficit country, in spite of elevated commodity prices. So my question is, as a rich country, it seems quite difficult for Canada to rely on commodity export alone to be competitive in the future, because there are evidence that Canada is losing market share in the auto industry, especially in high-tech industry. So is anything the government going to do to make Canada competitive in the high-tech industry?
Well, you're certainly right that the resource sector is one part of our economy. Our exports have been adversely affected because the global economy has grown more slowly. 70% of our exports relate to the United States, and as the U.S. resumes its more natural growth pattern, we're going to see those exports increase, as they will as Europe gets stronger. In respect to different sectors, and competitiveness is a major issue. We're addressing that in part through our low tax plan for jobs and growth. Also, targeted investments in the high-tech area and in science and technology. We have areas of strength, but we have some catching up to do in some other areas. The fact that Canada is doing well in resources doesn't mean we're adversely impacting on other sectors in the economy. And in fact, what it's doing, well, the first point to make in that regard is that resources have now become very dependent on technology. I mean, when you think about it, everybody knew that the oil sands were there. In fact, going way back, Indians used the oil that was seeping out of the ground to help construct their canoes. It was there, but it was worthless because you couldn't get it out. Then, as technology improved, you could get it out, but not economically. Now we can get it out at competitive rates, and that's just one example. We're reducing the environmental impact of conventional and non-conventional oil and gas extraction. So that's another instance of technology. But beyond that, outside the resource sector, our country is investing billions in science and technology, and will continue to do that.
I think one last question, and we have a rather clever Canadian economist on the panel who wants to ask it. So, Doug, if you need to, Minister.
Very simple question. Is there a housing bubble in Canada?
No. Sometimes quiet is important. The Central Mortgage and Housing Corporation, which is the government guarantor of 70% of the guaranteed mortgages in the country, is of the view that there will be a soft landing. The governor of the Bank of Canada has come to the same conclusion, as has the OECD in a recent report on Canada. The housing prices have moved up, but we think there's still affordability in the sector, and we don't see some of the key concerns that were starting to be evident prior to the crisis in the United States. I mean, we don't have any.
You said there's a soft landing. You said there has to be something landing.
Well, it could be a stabilization. It could be a moderate decline. I'm not in the business of forecasting real estate prices, but what I'm saying is three independent organizations have said that there isn't a bubble. That's the question that you asked. And what we're doing in that regard, and it's, our system is structured differently in the UK, but I know there's great interest in this issue here, and I understand that the governor of the Bank of England is going to be talking about it soon. We are reducing our government's involvement in the mortgage market, and the government guarantor, CNHC, has taken a number of steps to moderate growth. For example, it's reduced the amortization period from 40 years to 35, 30 to 25 years is imposed a down payment. It won't guarantee second homes or homes worth more than $1 million. It has strict credit standards, including, as one example, taking into account using the 5-year fixed rate when it evaluates credit for a consumer who wants a floating rate mortgage to provide some cushion. So there may be other steps that can be taken, but nothing dramatic is needed, and certainly nothing that might precipitate the very thing that we're trying to do.
Minister, thank you very much indeed.